We are with our featured guest, Ken Courtis, chairman at Starfort Investment Holdings. Ken, love to be able to get your take right now on what you're seeing from an investment perspective and where you see opportunities and really risks. I mean, the market had really moved up so much following President Trump, and then we saw the first major sell-off this Wednesday. Where do you stand?
I mean, the market had a cough. Shook a little bit, but it's right back.
Yeah.
What's really interesting, Catherine, is that we have a synchronized global lift in the economy. It's not a strong lift, but it's everywhere we're growing now. And I think it's the first time since 1980 that we've had such a synchronized lift in the world economy. And because companies, since the crash, have been working to cut costs, and use technology, any increase in the top line now goes very quickly to the bottom line. So we have a synchronized uplift in earnings occurring. S&P 500 earnings in the first quarter are up, it looks like, about 16.5%. Europe, the equivalent, up about 14%. The Asian economies, their earnings are coming up. So around the world, we have a synchronized but modest growth. And that's important that it's modest, because if it gets too strong, then they're going to raise interest rates too quickly, and that'll cool things out. And we've got this big sustainable increase in earnings. So I think stock markets look great. Particularly Europe, I like Asia. They're the two that have lagged the US. The US has gotten a bit ahead of us. It probably needs a bit of a rest. European bank stocks have just broken out after a 10-year decline. The European-wide index is just about to challenge its all-time peak, which has balked at 3 times previously, but I believe it'll break out this time. But even things like, take Korea. We've just had this huge scare. The rhetoric's gone up, aircraft carriers, missiles. You'd think that would kill the Korean stock market. Well, it just hit a new high.
What about the reasons behind the sell-off, which is everything surrounding Trump and all the headlines coming out of D.C. with respect to former FBI Director Comey, as well as relationships with Russia? A lot of concern that that continues and that it really puts back on the agenda any of his fiscal stimulus plans. That's the reason for the sell-off. Nobody's worried about it today. But what's your assessment?
We aren't worried about it today because Trump's going away. He won't tweet for a while. I think the market is running now on earnings, not on what Trump may or may not do. And the market has come to discount Trump and what he will get done. The expectations last fall were very giddy that, my word, we're going to have everything, a huge package. In the interval, market has come back to focus on fundamentals. The politics, we don't know where that's going to go. But the fundamentals, we know where they are, and they're strong. So I think we focus on that rather than on Trump. And if Trump does some good stuff, that's better. And if he gets in more trouble, we'll have to digest that when it happens.
What do you think, though, he's going to try to accomplish on this 9-day trip, 8.5-day trip to Saudi Arabia, as well as the G7 meetings?
First of all, he's going to announce a massive arms deal in Saudi Arabia. Number one, a 10-year, $100 billion deal. And number two, he's going to try to come out of these meetings, particularly the G7 meeting in Rome, as, at least he'll posture that he's the leader of the G7 today, and that he'll come back to America having changed somewhat the dialogue. Given who he's named as the special counsel, it's a person who doesn't do press conferences. Mullen has done 4 press conferences in his 72 years of life. He's not going to be out there leaking like we've had up until now. They hope that that's going to go off to the side, that he's going to be able to change the dialogue now and with his visit abroad, and then get refocused on trying to get some stuff done.
And what are your thoughts with his trip to Israel? Anything there that we need to know about or talk about?
He's named his son-in-law as the chief negotiator for the Middle East. He wants to get the support of Israel in many ways, and given that we had this notebook flare-up that he apparently told the Russians about this. But it's interesting. I took an airplane from the Middle East to New York a week before this quote-unquote secret was revealed, and everyone on the airplane had to put their notebooks in their suitcase. What secret?
What is your biggest concern, though, Ken, if there is one?
My biggest concern is that we get too worried and we miss rallies here.
Really?
That we get too cautious and we start putting money back in the bond market, which has nowhere to go but down. That we get too worried about commodities and we don't focus on them. Because if we're having this earnings uplift and this globally synchronized growth pattern, unlike many, the outlook for commodities is not that bad. You know that I think oil will be in the mid-70s sometime next year. With this massive infrastructure investment that's going to be taking place across Asia, I believe we have a super cycle ahead of us for the next 10 or 15 years in the commodity space again.
Can you give me a little bit more granularity on that? Because I don't think anyone's used the word supercycle in a few years.
Yeah, that's right, and that's why I like to use it. Trump is talking about a $1 trillion investment plan. What's going on in Asia is 26 times bigger than that.
How is that possible? How can they afford that when we often talk about China's debt?
Well, it's not just China, it's all of Asia.
True, fair, okay.
First of all, you have the Asian Infrastructure Investment Bank, capitalized at $200 billion, and we're now a part of it. That money will be levered 10 to 15 to 1. There you're talking $2 to $3 trillion. You have the new Development Bank, which is Emerging Markets IMF. It's capitalized already at $250 billion, and that will be levered 10, 15, in fact, it could go as high as 20 to 1. There's another $3 or $4 trillion. Then you have the Silk Road Fund, which will represent something like $600 billion. Then you have all of these national programs. Pakistan, a $60 billion program. Bangladesh, a $26 billion program over 10 years. The money is coming. It's starting to move, and that's going to lead to lots of demand for cement, iron ore, steel, copper, you name it.
Ken, is there a concern, though? What I'm hearing is that there's going to be a lot more governments around the world that are going to have leveraged balance sheets. And maybe it's off balance sheet, but you know what I'm saying.
You know what's really interesting is that when we think of governments and countries that have a lot of debt,
yes,
we're actually talking about developed countries. The emerging markets, with exception, have great balance sheets. Plus, the infrastructure will give them better growth, better productivity, more tax revenues. I'm not worried.
Is there something that is also perhaps out of consensus that you really like that people aren't talking enough about?
I continue to like the US dollar. In spite of, a lot of people don't like it anymore, I continue to think the Canadian dollar will make a new low.
Okay.
Number one. I like some of these Asian equity markets. Number two. Number three, I like some of the energy producing country, emerging market country sovereign bonds. They're way out of whack with other bond markets in terms of their high yield. They have very high yields relative to the risk and the debt that these countries are carrying. And if I'm right about oil prices, that we'll see in the mid-70s within 18 months.
That definitely sounds out of consensus. Thank you.
Pleasure.
That, of course, is Ken Courtis.